called Williams Percent R or Williams Percent range. This is my weblog you're looking at the moment. So about Williams Percent R or Williams Percent range. Let me just go and add that indicator to the chart. We are using Overbought chart and looking at Australian dollar versus US dollar. Today is 20th of June 2021. To add this to the chart, we go here and just add Williams %. We have overbought and oversold. I'm going to leave those at -20 and -80. Some people change these to -30 and some change this to -70. But I'm happy with the preset numbers. I'm going to change just the colors so to make it a bit more clear, and also this one to the red. So make it a bit more, oh, that's fine, yeah, clear. The period is preset number is 14. You can use this, or you may change it to 28 to get less and less false signals anyway, because it eliminates some of the false signals, and you get very less noisy chart. So I'm going to set it at 28 to see how it goes. Create. Let me make this window a bit bigger. As you can see, oversold in red, overbought in green. Williams Percent R, and this type of momentum indicator. So this is a momentum indicator, like stochastic indicator, for example, or many other indicators that I have videos about all of them. So this type of momentum indicator moves between 0 and -100. This indicator measures overbought and oversold levels. The period typically is set to 14, but as I said, I prefer 28 as it will reduce the noise. The best results are in a range market in which you can use both buy and sell signal. And one important thing is overbought and oversold is not the turning point. So overbought or oversold reading doesn't mean the trend will change. Overbought means the price is close to the highs of its recent range, and oversold means the price is near to the lower end of its recent range. Why this is important? Because in very strong trendy markets, sometimes prices remain in overbought and oversold areas for a long time, and if you go and just open a sell based on price being in overbought, then the price will just keep going and up, and you're gonna lose. Anyway, there is ways to manage the position on those markets. You can put the stop losses, but it's very important to know what is overbought and oversold, and what markets you're looking, and what trend it has. So let me go back to the chart. Here you can see we are in a side market. So I'm gonna just add a channel to show you from here roughly. Maybe not to here. You can see that we are in a channel, so price moves between these two lines roughly. Okay, so if you listen to this indicator, for example, you figure out, oh, okay, price been in the channel for a while now, just go here and put the sell position, sorry. So I'm gonna add a line, vertical line here. Okay, sell based on this here. Just I'm going back here. Okay, in a range market, buy if the indicator moves out of the oversold area, and sell if the indicator moves below the 80 or overbought line. So, oh, sorry, this is, I should change this. This should say minus 20. Anyway, so you can see here, the price goes below minus 20, and we should just open a sell position. Then price goes down, and because you know that it goes between this range, and you wait until it goes closer to the range, to the bottom of the channel. But some people just don't wait that long. They just say, okay, when we go to the oversold area, it's a good time to close it. Then they close somewhere here, and this is more common strategy and more maybe safer. But another way is just to use the trailing stop loss, or just move your stop loss into the green and wait for the price to see what happens. Then again, it goes here, for example, it gives you a buy signal. As you can see here, it gives you a buy signal, but because it's not close to the bottom of the channel, you may not use that. But if you want to use it again, you should put a stop loss. And like many other indicators, this is not 100% right, and you get good and bad signals, but in at the end of the day, you're getting probably more good signals out of this indicator. Yeah, again, you can see here, you get a good buy signal and price goes up. Okay, and in downtrend, like here, for example, you can see it gives you a sell signal here, and depending where you can catch the signal, maybe at the middle somewhere, then you stay in the downtrend and just moving your stop loss or using trailing stop loss. Let me go back to 30-minute chart. Okay, here you can see the same in 30 minutes, so it doesn't matter what time frame you use, it's still working. But to show you the bigger picture, I'm just going to daily. I don't say that you should use this on daily markets, but it works over there as well. This is a very nice indicator for day trading. That's why I'm saying hourly or 30 minutes is good, but daily is still working. So I'm going to add a channel here for you so you see what I'm talking about. Here, for example, you see, okay, it goes, we are in a downtrend, but in a channel. So in a downtrend, in a downtrend market, do not buy. Just sell if the indicator moves below minus 20. As I said, I'm going to fix this problem here. So in the downtrend, you can see here, price gone above minus 20. So let me just add a vertical line here. Okay, you can see it's a very nice to go short. And because price is moving in this downtrend channel, then you can just move your stop losses. It goes here, you either close here and say, okay, that's enough for me, or you moving your stop losses and wait for more and more gain. It's up to you. That's just the strategy that you should think which way is better for you. If you sell, you close here, then because it's a downtrend, you don't buy in oversold. You wait for another overbought like here. Let me add another vertical line. Then you sell here, and start going down again. The same scenario will happen when we are in uptrend. Some uptrends are very uh, sharp, so you may lose the opportunity to enter, but eventually some places you can enter the market. For example, this uptrends, the first wave you may lose the entry points, but on the second wave, after it goes back here, it gives you the opportunity to enter the market and goes up. Yep. So on another in the video, I try to talk about the Elliott waves, just um, how Elliott waves works, because I just said something about it and maybe you don't know, but Elliott waves, wave console goes like 0.1, then 2, 3, 4, 5. But anyway, this is how you're gonna use this indicator, and it's very nice. It works good for day trading, but at the end of the day, this indicator, like many other indicators, has good and bad signals, and this is not investment advice. And as you know, more people losing money on trading online than making profits. So always invest only as much as you can lose. Okay, have a nice day. I hope you learned something today. See you later.